Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is September 7th, 2023, and today we're going to be looking at oil boosts Tesla and China leaves Apple on a slippery slope. We're going to start out with crude and just noticing some of the moves that we've seen happening in crude over the last couple of weeks. We've talked about angles and directions and biases in the markets. We've talked about key targets. We've actually surpassed the target of about 85 and reached my next target of 88. This 88 was the next level that I was looking for. And the angle and the growth that we saw before is repeating through here. So we are on track to likely retest $95 in crude, $95 a barrel. Now, there's two things that we should be aware in that. One, if oil prices are rising, then inflation is going to continue to rise. So we are going to get some sentiment, some fear, some expectation that we could see weakness in consumer spending. We could see pricing in future rate hikes. We could see a sell-off in equities due to higher costs and therefore lower demand in multiple areas if it's being driven by crude. And again, we can take out food and energy and take core CPI and core PCE numbers. But in the end, oil still applies to transportation costs as well as getting us products from the producers and plastics. And there's so many things that oil has an impact on that these rising prices and the surpassing 85 and headed towards 88 and now 95 is going to cause some alterations in spending habits, alterations in costs, alterations in margins when it comes down to producers. But one of the companies that seems to do well while oil prices are climbing is Tesla. So if we take a look at Tesla, Tesla is a speculative stock, and even though crude is climbing, it's a far stretch to assume that crude is going to push Tesla higher in a 1-to-1 ratio. If oil prices are going higher, people aren't going to instantly sell their traditional combustible engine cars and rush over to buy an electric vehicle, especially one from Tesla. But Tesla's prices are low and creating that higher demand. They've reduced and restricted the prices, and so as oil prices are climbing, the correlation is climbing. So let's put a correlation study on here, and we're going to take a mathematical correlation for the last 10 days, which is 2 trading weeks, versus crude and Tesla up here. So we click on OK, click on apply, and what we're going to do is we have to adjust this to 1 and -1. We want to look at the correlation, 1 being the absolute perfect same instrument correlation. And as you look at this, you can see that the majority of the time, yes, crude and Tesla have a positive correlation. If crude is going up, Tesla has a higher demand. If we mark this from the 0 to the 100% levels, you can see that we spend more time in the positive correlation than the inverse or negative correlation. Currently, we're at about 56% correlation between crude prices and Tesla. So this is a correlation, mathematical, showing that there's some drive. If crude's rising, then Tesla's going to do better. At least we're going to have that expectation. But the way I see this is it is speculative. It is investor driven. It is not because we're going to see a massive increase in Tesla's earnings. But I will have you note that during this time that Tesla went from 313 all the way down to 101, the correlation was very high, and that was when crude prices were selling off. If we were to go back and look at crude, say on a quarterly basis or a month-to-month basis for the last couple of years, and look to see when prices were rising, we were rising through here, and we found the base and climbed back here, but we want to go back on the 3-year weekly, there's a little delay there, and look at the time frame from 2020 all the way up to the peak in early 2022. Did we see Tesla increase in its revenue? Not just whether the stock went up, because again, that's speculative stock movement based off investors, but did we see that positive correlation? Did we see crude go from $33 a barrel to $130 a barrel? We're seeing 4 to 5 times growth in that move. Did Tesla's earnings increase that dramatically as well? If we go back to 2020 and 2021 and to 2022, taking a look at Tesla from the week to week, there's a similar growth in as far as the stock goes, but we saw 76 cents to 80 cents to 93, 145, 186. The trajectory was the same on its earnings but not at the magnitude the oil went. So this move we saw go from 118 to 414, almost the 400%, similar to oil. So the price moves are correlated, but not necessarily the earnings. We didn't see a 400% increase in earnings. Now we did have a huge spike here and right to here 322 before rolling back down and dropping. So we saw prices going higher and higher, or your earnings going higher and higher, peaking out roughly the same time oil peaked out. And then we saw it drop and drop and drop and drop and drop. So we see these declines in prices as well after we reach these peak performance. So correlations there, mathematical correlations there. Earnings don't grow at the same pace, so it is speculative. At least I'd say probably half of it is speculative from investors not necessarily expecting earnings to run at that rate. But if we go back here and look at the expected target or expected move and assume that we are going to go back just to this $95 mark, the percentage move from current price up to that 95 is about 8%. We saw almost an identical move in Tesla during that same time frame. So what does 8% look like in Tesla? An 8% move higher in Tesla from our current price would bring us right into the last high, right here. We had this gap, we had this test, we had an island reversal. If you're a price pattern trader, this would be arguably an island reversal. Gap up, gap down, trade down. So there's a little island reversal. But if you go to those highs here, the lows here, the gap and trade back and the retest of resistance, and even taking this all the way back to last year, this is a key level, and I'm expecting Tesla to go up to about 275. Now that could change, and we could adjust some things, but if crude's going to head up to 95, I'm expecting Tesla to get up to 275. Now, one of the other stocks that has a similar correlation is actually First Solar. First Solar, FSLR, the same idea that we're looking for substitutions, ways to lower costs, ways to reduce exposure. You see it's 56% correlated here as well. Almost identical as far as the way Tesla looks correlated to crude. And so if Tesla is rising, has these upside targets, and we're not getting the rally in First Solar, this could be a low-cost opportunity to sell puts. We talked about this a couple of weeks ago. We can see we did bounce off it. We returned back down to these lows. But if we hold up anywhere above 174, which was today's low, then I would look at this as an opportunity to sell puts to collect premium and possibly see it go from 179 back up to 209, 210. If you wanted to buy a call or buy the stock itself, I think that's a reasonable target as well. We could go back historically and look at the same rally and the same fall, but it's the correlation that we're looking for. We're looking for that lockstep move. And First Solar just hasn't rallied with crude's rally in the last couple of weeks. So this is what I'm watching for to give maybe a bigger opportunity than even what we could see in Tesla. And it might be interesting to look at Tesla in conjunction with Chinese large cap stocks as a representation of how well the Chinese economy is doing and the fact that we do see Teslas being exported into China, primarily from those Tesla Model Ys that are created in Canada, but still Tesla is being exported into China. But we want to look at what happened with Apple. If we go over to Apple, AAPL, we can see the sell-off, the gap down, the close down, and then the acceleration with the gap down and slight close up today. Now, we're not going to look for the correlation with crude versus Apple, but we want to look at the correlation between FXI, Apple, and the Chinese large cap. So I'm going to edit the studies here. We're going to put in FXI, the large cap ETF. And Apple, if you weren't aware, the news is that Apple iPhone was banned from being used by government entities and therefore people in the government. Now, as we're looking at this move down, this gap down, close down, it's not just the gap down, close down. It's not just the gap down, close up off of support. It's that we just created a lower high, lower low. And this will impact future sells, clearly. Now, the lower highs, lower lows, and the breakout through here, if it gets through this low, then we have a long-term lower high, lower low. We have an island here, but it's not an island reversal. It's an island gap and an island again with another gap. I would be looking back to major long-term support levels. Looking at FXI, it's not, again, just that we banned it from use by government agencies and individuals. But if we look at the correlation, here's the 1, here's the -1. We can look back at this last year, and we'll just block that out from 0% to 100%. And we can see the majority of the time, if the U.S. market is going to do well, and we're still exporting apples to FXI, well, if FXI is doing well, then they have more money to spend. If their manufacturers are making products, if their large cap stocks are doing well, then that's a good representation of the economy. And you can see the majority of the year, there's only a little while where we don't have the direct correlation, and we're currently at an 80% correlation with FXI. So we have not only a ban, but we have a very, very high correlation with Chinese large cap stocks and Apple. If we're to go look at FXI, and we could look at the individual stocks like JD and Baba and Baidu, etc. But if we're looking at the FXI and saying, what is our expected trend? What is our expected move in these Chinese large cap? We sold off from 33 down to 25. Now we traded a widening pattern through here, but this is a lower high, lower low again. If we break through the low near 26, we're looking probably about a $2 or $3 move lower. And a $2 or $3 move lower would bring you down to 24. That would not only bring you down to 24, but it's going to bring you back to test the next major support level. And this is our year marks on FXI, that we're looking at possibly dropping down into this oversold area. That would bring us back all the way through 2023. The last time we were there was last October, so we're talking about a year ago. And it was only 2 days that traded below there. That's not a lot of defense. It's a solid bounce, but it's not a lot of defense. And so if we get through 20, it really could continue to fall. But this is my expectation. My targets would be 24 and then possibly coming all the way back down to 21. If it goes through 21, then we're going for 20. If we go through 20, we're heading back down to 15. And if the correlation continues, the moves down in FXI, the continued move down in FXI, could see a continued decline in imports from China. And again, as China goes, manufacturing goes, so does their purchases. And if that's sliding, if that's fading, if the Chinese large caps are losing, then Apple's likely to be losing as well. And again, lower highs through here. We have lower highs, lower lows. Break through 26 is headed to 24. So we already have a double whammy against Apple. The ban, the slowdown in the large cap Chinese stocks and the manufacturers. The last thing we're going to look at today is copper. Copper prices have a very high correlation to Chinese large cap, to manufacturing data, including Apple. They call it Dr. Copper. Copper can be a leading indicator for the global economy and a leading indicator for manufacturing. And manufacturing is a leading economic indicator for economic health as well. So if we go over and look at copper prices, taking a look at copper, copper prices have already been in a downtrend. We've seen a decline in copper over the last little while. And if we're to look at copper right through here, you'll see it looks very similar to the Chinese large cap. We made a higher high. We widened out, then we made a low. This is a lower high. And if we get through this low, then we have lower highs, lower lows. And the move that I would expect there is going to go from 380 down to about 360. So we're talking 20 cents. That brings us down to 340 and returns us back to last October, very much like FXI. You can also see the high correlation between FXI and copper prices. And we're at 67% correlated, but even fewer times that there's an inverse correlation with copper and FXI large cap. So whether you want to look at China or whether you want to look at Apple, either way, both of these give you the sentiment, the indication that if you're going to see liquidation in copper, if you're going to see liquidation in FXI Chinese large cap, with or without the ban against iPhone, those could be early tells that Apple is going to continue to sink. And if I'm going to watch for the break of support here or the break on FXI, and I see Apple continue to sell off and clear today's low, we don't even have to go back very far. We just have to clear today's low, because today's low was below the lowest close. Not the lowest price, but below the lowest close. And then Apple gives us a 190 to about 172 level. So we'll call it 18 points on the next drop. And 18 points would bring us down to about 155. 155 doesn't take us to the annual low like copper and FXI, but absolutely brings us back into the beginning of the year. So where copper goes, FXI goes. Where FXI and copper go, Apple goes. Where Apple goes, the Nasdaq goes. And so there's a lot of pressure to push equities lower with Apple. The only ones that are going to rise are those that are going to benefit from high energy prices, at least here now in the short term. So that's going to do it for me. Thanks for watching, and we'll see you again next week.